Credit cards. Convenient tool or silent wealth killer? In this video, we break down how credit cards can either support or sabotage your financial future. If you're ready to take control of your money and stop the debt trap, like, subscribe, and let's expose the truth together. Credit cards can feel like a modern-day miracle. They offer instant access to funds, help you build credit, earn points or cashback, and provide a layer of security for your purchases. But for many people, credit cards have a dark side, one that quietly chips away at financial health and future goals. The answer to whether credit cards are ruining your financial future isn't a simple yes or no. It depends on how they're used, understood, and managed. While they can be powerful tools, misused credit cards can become ticking financial time bombs that derail long-term success. Let's explore the real impact of credit card usage and whether it's moving you closer to wealth or away from it. The allure and the trap. Credit cards are designed to be enticing. From sign-up bonuses and travel rewards to purchase protections and cashback programs, they create a compelling narrative: spend and be rewarded. And at first, this seems true. You might earn airline miles, get extended warranties on electronics, or enjoy perks like free hotel stays. But hidden behind the glitter is a system engineered to profit off consumer debt. The more you carry a balance, the more you pay in interest, and those interest rates are often sky-high, commonly ranging from 18% to 25% or more. This means even a small unpaid balance can snowball into a burdensome long-term debt. The real problem begins when people use credit cards as a substitute for income. It's easy to swipe a card during emergencies or to fund a lifestyle just out of reach. Over time, this creates a dependency where credit becomes your safety net instead of your savings. And that's where financial futures start to unravel. Debt accumulation and its long-term consequences. One of the most significant ways credit cards can ruin your financial future is through chronic debt accumulation. Unlike a mortgage or student loan, where you're investing in an asset or your education, credit card debt is usually tied to consumption: dinners out, electronics, clothes, or vacations. These are items that don't hold value over time. So you're paying high interest on purchases that often have no lasting return. As credit card balances grow, minimum payments increase, and a larger chunk of your income is diverted toward interest payments rather than wealth-building activities like investing or saving. This creates what's known as the debt trap. You pay just enough to avoid penalties, but never enough to make meaningful progress. Credit score complication. Another hidden cost of mismanaging credit cards is the damage it can do to your credit score. A low credit score affects your ability to secure loans for big purchases, and it also means higher interest rates if you're approved at all. Even rental applications, car leases, and job opportunities can be affected by poor credit. Even if you make all your payments on time, carrying a high balance relative to your credit limit, what's known as high credit utilization, can lower your score. This metric alone can account for up to 30% of your FICO score. So, if you regularly max out your cards or keep them near the limit, lenders may view you as a risky borrower, even if you never miss a due date. The psychological impact of credit use. Beyond the financial consequences, there's a psychological price to credit card dependence. Swiping a card is painless. Unlike handing over physical cash, which creates a sense of loss, credit spending feels abstract. This disconnection makes it easier to overspend, underestimate expenses, and live beyond your means. Over time, this habit can erode your sense of financial discipline and make it harder to develop a savings mindset. People who rely heavily on credit often feel trapped, anxious, or ashamed of their financial situation. This mental burden can lead to poor decision-making, avoidance of financial planning, and even relationship stress. In the long term, this emotional toll can be just as damaging as the financial debt itself. Lost opportunity costs. Every dollar spent paying off credit card debt is a dollar not saved or invested. This is perhaps the most insidious way credit cards can ruin your financial future. Consider the power of compound interest. If you're paying $300 a month toward your credit card balance, and that payment continues for 5 years, that's $18,000 you could have invested in a retirement account, stock portfolio, or emergency fund. When people say, credit cards are expensive, they're not just talking about interest. They're talking about opportunity cost, the wealth you could have built if your money had been used more productively. The myth of responsible use. Many financial gurus argue that credit cards are harmless if used responsibly. And while that's technically true, it's also a misleading oversimplification. Responsible credit card use means paying off your full balance every month, avoiding interest entirely, and never spending more than you can afford. However, studies show that the majority of Americans carry balances from month to month, and many underestimate how much interest they're paying. Moreover, even if you pay in full every month, reward programs can encourage unnecessary spending. You might convince yourself to book a trip, dine out, or buy new tech just to earn points, purchases you wouldn't have made with cash. Is there a healthy way to use credit cards? Credit cards aren't inherently evil, they're tools. Just like a car can get you to work or crash into a wall, how you use them matters. If you can stay disciplined, use cards for planned expenses, and pay the balance in full each month, they can offer convenience, fraud protection, and even modest rewards. They can help build your credit score, which in turn lowers your interest rates on future loans. But the truth is that very few people maintain this level of discipline consistently over time. Life happens, job loss, medical bills, unexpected expenses, and credit cards often become the backup plan. That's when the tool starts turning into a trap. What to do if you're already in trouble? If you suspect credit cards are hurting your financial future, the first step is awareness. Track your spending and identify patterns. Are you using credit for essentials like groceries and gas? Are you only making minimum payments? Are your balances growing each month? Finally, educate yourself. Learn basic budgeting, explore debt repayment strategies, and consider working with a financial advisor or nonprofit credit counselor. The sooner you act, the more time you'll have to reclaim your financial future. Credit cards aren't evil, but misusing them can be. Now that you know the risks and smarter strategies, it's your move. If this opened your eyes, like the video, subscribe for more money tips, and drop a comment with your credit card experience. Let's grow wiser together.